It is banks earnings week. Citi, Goldman Sachs, JP Morgan, Wells Fargo scheduled to report tomorrow. Bank of America and Morgan Stanley, they're going to be in focus on Wednesday. Joining us right now is Betsy Grazik. She is Morgan Stanley's head of banks and diversified financial research. And I imagine we were going to talk about earnings this morning, and we will. But I'm curious, actually, what your reaction is to this big announcement from JP Morgan today, where they're planning to invest $1.5 trillion over the next 10 years.
Yeah, so this announcement that came out just a couple hours ago, right?
Yep.
Is reflecting, I believe, not that, I believe that JP Morgan is looking to bring to bear the resources of the entire organization to this effort. So it's not just on balance sheet lending that they're committing to, but also focusing the time and attention of the investment banking division to find those companies that can help drive improvements in supply chain for things like rare earth minerals, in addition to a whole range of other needs that we have to develop and improve our security.
Right. So the stock's up 1% today. I imagine it's more up 1% because the market is moving up in a higher way just across the board. But my question to you is, how much do you think that's going to actually add to the business?
So when I think about 1.5 trillion, I think in the press release they highlighted that's about 500 billion more than they would have done anyway.
Right.
So then you take 500 billion over 10 years, so you're talking about 50 billion a year. If it were to be only on balance sheet, and in 2025, we are forecasting that JP Morgan will be growing its loan book by 63 billion. So it is something that's in the run rate of the organization, but importantly, as they said in the press release, it's not just loans, right? It's also underwriting.
Right. I'm trying to understand what you're saying. Are you suggesting that because there's already a $63 billion run rate, that this is not a big deal, or it is a big deal?
No, I think it is important,
right,
as it puts a spotlight on some critical industries that the government is looking to increase our investments in. And I think what the announcement today is saying is, we're with you.
Right.
And we're going to help this get done. And they have the capability to be a partner in helping it get done.
In terms of earnings this week, who do you like? Who don't you like? What should we be looking for?
So in terms of earnings, which, as you indicated, kicks off tomorrow with a bang, we are looking for beats. We are looking for companies to do better than consensus.
Right.
Our estimates are, on average, 3% higher than consensus. And in particular, the money centers, we are 5 to 9% above consensus, most for Citigroup. But across the board of money centers, we're above the street on Citi, JP, B of A, Goldman, Wells. And why is that? Capital markets is back, right? As you know very well, capital markets is back. And there's more runway ahead of us. So this is not the end of the acceleration in deal activity. In
terms of stock price right now, buying a bank or not, you like Citi the best, it seems like, or
well,
no?
Yeah, I would say that we are overweight Citigroup, Bank of America, in particular, in the money centers.
Okay, and who would you sort of be either neutral to walk away from right now, given where the prices are?
Well, I'm not walking away from anybody. I have upside to my price targets for all of my banks right now. Okay. And that's because we have an expectation for an increase in earnings growth as the next 2 years unfolds.
Right.
And that's a function of improving activity levels in capital markets primarily.
Okay. Betsy, I want to thank you.
Okay.
Nice to see you this morning. You bet.